Brooke Sutherland, columnist for Bloomberg Gadfly, joins us now. She's out with a new column entitled GE Investors Need to Settle In. It's going to be a grind. Brooke, does that imply that you think that this quarter wasn't it, that it wasn't the kitchen sink quarter?
No, I mean, they certainly got a lot of bad news out of the way with this quarter. But, you know, they have this November 13th date for an analyst investor meeting. And John Flannery has sort of said that's when we'll get an answer on whether or not we're going to see a cut to the dividend. That's when he's going to walk us through, you know, what sort of portfolio changes we might be seeing. That's when he's going to maybe lay some of the more, you know, groundwork and just in terms of how bad some of these challenges are in some of GE's units. So I think, you know, we could get more bad news then. And then this is really going to be, like I said, a grind. You're going to have maybe another year of really tough quarters and challenges in the power and oil and gas business. And, you know, at some point, I think you do have to wonder whether those are more sort of secular rather than cyclical challenges in those businesses.
We should put this into context, though. So far, and I stress so far, we've got a downgrade from JP Morgan and from Morgan Stanley today as well, I believe. I mean, everybody else seems to be pretty neutral, or else they haven't gotten around to it yet.
You're right. There are a lot of positive analysts out there, but those analysts have had those positive ratings through GE's slide. And if you look at the stock, I mean, it's been on this just sort of downward spiral for a long time. And a lot of these analysts have still been saying, oh, no, don't worry, everything's okay. Everything's not that bad. It's not as bad as it seems. And now we know it was actually worse than it seemed and worse than people thought. And so I think you have to wonder, okay, well, who got this right? And I think, you know, some of the bears on the street have been proved correct. And so now maybe we should be taking their word a little bit more seriously.
Why today, Brooke? I mean, Friday was the earnings day. You know, shares actually ended higher. Why are we taking the hit today?
I think that, you know, John Flannery did a very good job on that conference call, and he sort of took responsibility. He was very frank about just how bad things were. You know, CFO Jeff Bornstein sort of fell on his sword, and he's leaving the company, and he took a lot of responsibility. And I think people were sort of relieved to see that it's not GE trying to brush this under the rug. They're being very open about, hey, we've got some issues that we've got to work through, which is good. But then I think you go back to just let me look at these numbers, and these numbers are really sort of not painting a pretty picture, and they're indicating that this is going to be a multi-years worth effort of restructuring and getting these businesses back on track, and it's going to be a while before we start to see meaningful improvement.